guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're having a great week so far. Today, my friends, I have something incredible to show you. I just found some of the most amazing things in multiple Bitcoin charts today, and we are having some incredible confluence right now happening across multiple different data points that could suggest what is in the near-term future for Bitcoin. Now, this is potentially suggesting that by the end of this month, Bitcoin could be finishing up a massively bullish formation, and at some point next month, Bitcoin could see $52,000 or higher. We could be closer to the bottom than we think. Now, having a look right here, obviously, it does not look too great short term. We are still being held down by this resistance, and we may be held down for just a bit longer. But zooming in, you can see that we are forming a very interesting pattern. And I also wanted to point out some legacy trends that are happening on the macro time frame. And you're going to want to stick around for this because this could signal a massive reversal for Bitcoin is in the works. Now, I know it's going to be a lot of hopium in today's video, and I'm not saying we can't go lower. We are going to go over our short-term price targets, but you must stick around. You have to absolutely see what is happening because this could literally be the last opportunity, and I mean it this time. I'm as serious as they come that this could literally be the bottom of Bitcoin very soon. So if you do want to hear about this chart and why I do think this could be happening soon, you definitely want to stick around. Really, really amazing, incredible things happening. And on the side note, have you guys seen what just happened with the US IRS and what just happened with a court case? Is the IRS potentially giving us some positive news about Bitcoin and taxation? Well, we are going to talk about that. And also, before we finish the video, I have a massive warning that I do need to give out for a lot of the new people in the crypto space, but even some of you that have been around for a while. There's two things happening right now that I think we should be a little bit cautious about. And of course, there is the broader macro picture, which we need to discuss what's going on with stocks because there was kind of some bad news that came out and it doesn't really look potentially too great for traditional equities. So we're going to get into all that. If that sounds good to you, you know what to do. Today's video is going to be jam-packed. You're going to want to stick around to the end of this one. Without further ado, my friends, if you're not subscribed, well, you're probably missing out on this point because we are going to dive into this right now. Check this out. Strap on your seatbelt. It's going to get crazy. So I don't know how crazy it's going to be, but this is really cool. So check this out, guys. So you can see right here, obviously we've had the resistance, we've had the resistance, we've had the resistance, we've had the resistance, and it does still look like we're forming this falling wedge pattern. Now you can see that the last two times we formed this pattern, we did in fact have a major breakout. Is this time going to be different, however? Are we going to continue to fall down? Is Bitcoin going to go to these crazy targets like some of these people are saying? Well, if we actually zoom in and have a look. Now, first of all, keep in mind we are in this giant falling wedge, which we know is actually a bullish pattern. Believe it or not, as crazy as this seems, they do, as you can see in the past, tend to break out to the upside. But what is more interesting is that we are putting right here, you can see on the 4 hours, starting right from the support that we had at the end of December of last year, we have actually completed, finally, 3 points of contact on the top and on the bottom. And you know that when you get 3 points of contact, you have an official trend that has formed, right? So we have this up here, 1, 2, and we just got rejected at this very important level at around 39,000, which I explained why this level was so significant. You could see we actually came down here and touched it. But all that aside, you can see we had the bottom here, we had the bottom here, and we had the bottom here. So that is 3 points of contact on the top, 3 points of contact on the bottom. So what exactly are we looking at? Well, it appears that what Bitcoin is forming right now is actually a descending broadening wedge. And you can see it kind of looks like a megaphone, right? It's actually getting wider. It's fanning out as we're coming down towards the bottom. Now, this does not signal that we're looking for an imminent breakout to the upside today. But if you just simply have, and you could just, I just did a simple Google search, but you can go in, you can read the texts, you can look at traditional markets, descending broadening wedges are in fact reversal patterns at the bottom of markets. You could see every single, I mean, look at all the top results that come up. This is usually what happens. Now, it doesn't happen every time. Obviously, there's always a percentage chance there could be a black swan event. Stocks could crash 20%. But ultimately, what we are looking for here is a breakout to the upside. Now, having a look right here, you have seen that we have held this legacy trend. I'm going to get back to this in a minute, and you're going to see why this confluence is absolutely mind-blowing. But if we go back over here and we have a look, we did get this major rejection. We got rejected 3 times here at this resistance. So this is showing me that on the very, very short term, it's going to be difficult for Bitcoin to break out of this level, right? So here is the possibility. This is sort of the bearish / bullish, more bullish possibility. But what we could see is actually Bitcoin get rejected here again, come back down, actually fall below $30,000 for just a little bit, come down here, catch the bottom of this trend. This would fill all those bids down here that we see around the $28,000, $29,000 level, freak people out. They think we're going down to 25, 24, 20. We can actually come back up to the top of this wedge. This would be the 4th point of contact. And at that point, we would actually look for the breakout. Now, according to any of these charts that you look at, the price target for this breakout is actually right here, right where the formation started. And if we just draw a simple line right there, you can actually see that that would bring Bitcoin up to right here around the $52,000 level. Now, if we have a look at the time, how long would it take for this move to play out? Well, it depends, obviously, but you can see that, right here is essentially the beginning of March, right here, right? So what we could see is February still kind of, freak people out, fall down. We could dance below this level, test it. And then just as we enter into March, we could end up coming back up to this level, break out of this with that price target all the way up here. And everyone that sold, everyone that panicked down here because Bitcoin fell below $30,000, that would be the ultimate opportunity for all of these institutions to be accumulating. It would be just more sideways and downwards action throughout February. Everyone would probably be depressed and think that the game was over and it's boring and it's terrible. And I think this could be one of the most amazing possible scenarios for Bitcoin. Now, if you want to know why, I also think that we could be extremely close to the bottom and why this could be playing out this month leading into next month, you can just see the massive confluence on these charts. Not only do we have the descending broadening wedge, which is usually a sign of a market getting ready for reversal, you can also see that right here, essentially, when we had this consolidation right here around 24,000 before Bitcoin took off, if you just draw a simple spider line trend line, you could see every single time that we have touched this level, we have bounced off of it. And guys, look at this. Look at this right here. You can actually see that when we actually had this dip right here on January 24th, we came down exactly to that level. So this is what you want to see. But hold on, it gets even crazier. If we take this exact same trend line and bring it all the way back here to where we had this sort of fake out mini bull rally that we had back in June of 2019, you can actually see, if we zoom into this, this was a trend that started all the way back then. Now, obviously right now you can't see the rest of the chart because the Bitcoin price got a lot higher since those days, but you can see right here that if we take exactly where we had this close, right around $12,940, and this was the Bitcoin high candle close of June 26th of 2019. I'm not talking about the wick, I'm talking about the actual close, which is what most traders consider to be the most significant price, because then after that, you'll notice that's where the wicks on the candle come down to. So how crazy is this? So look at this, right here, we take this line. Look, we got this next pump, didn't quite get as high. We got all the way up to 13,876. We wicked out right here on July 10th of 2019, and this is where we started to form this. Now, remember what I said about 3 points of contact, right? Now, if we zoom out and we have a look right here, this is exactly what we got. We got our 3rd point of contact right here when Bitcoin touched it on December 19th of 2020. And you can see this consolidation right here. Now, dragging this line out, the same exact line that I showed you guys, look at this. Confluence here, and oh my goodness, confluence here. Now, even crazier than this, and I was kind of inspired to look at these long-term trend lines because I was following Velvet over on Twitter. I definitely highly recommend you guys check him out. He actually made these legacy channels, and it was incredible to see. So he took essentially this high. Now, this is from 2017. I went from this point down here. He went from way back in 2017, drew this line all the way, and you can actually see that we have had 1, 2, 3 points of contact on the bottom. And he also points out the similarities between what we did back here in October of 2017 leading into 2019 as well, with this one touch here, reclaiming it. Then we bottomed out. We had this long sort of accumulation phase, and then we fell down again. 1, 2, 3. And if we zoom in again, 1, 2, 3. So I've already shown you 3 things right now that are all lining up for Bitcoin, showing us that the bottom is potentially very close and we are looking for a reversal. Now, I know you're watching this video saying, well, I want it to happen tomorrow. Well, unfortunately, it's probably not going to happen tomorrow. It's probably going to take the month of February to build this base, maybe continue falling downwards in that ascending, broadening wedge before continuing to the upside. And I honestly think that obviously March, we do have the Fed coming out and talking again. So we'll see if they are going to raise rates. That could be a bummer, right? But if we just look at the technicals, we ignore all the news, we ignore all the FUD, we ignore everything happening right now, in the media, talking about just technicals, this is looking extremely bullish for Bitcoin. Another thing I want to talk about, and we used to use this all the time on the channel. For those of you that have been around since the early days, back in 2018, we were looking at this all the time. This is the Super Guppy on the 3-day. And this essentially shows you major trends starting and ending. And usually when the Guppy, with the exception of some of these little fake outs, usually once we tend to go into the green, we stay into the green for a prolonged period of time. Even right here, we went into the green starting in August 17th, 2021. And yes, even though we have come back down, from that level, we were sitting here at around an $888 trillion market cap. And then now you can see our $1 billion. And right here, we went up to a $1.288 trillion market cap. But that's not even the important part. The important thing that I need to point out right here is the fact that you could see we did something very similar back here, okay, right before Bitcoin continued to explode in early 2020. And what that is the Guppy essentially flashed this blue, right? And then here we flashed blue a second time and we crossed into the red. Now keep in mind, even though you are getting the red on the Super Guppy, you've usually already had the price decline at that point, and it generally signals a reversal. We are doing the exact same thing. Look, we had this blue down here, and we have this blue up here. We had the pump, right? We had this pump. It was a fake out. Then we did fall, right? What are we doing right now? We're also falling. And the same way that we went back into the blue here, we're also going back into the blue here. And then you could see as soon as the blue got back into the red, which doesn't usually last for a very long time, that does send us into the green. And we usually go into a multi-month uptrend. And I think the same thing could be happening. Now, we don't have to turn red, right? Red is like we had a major crash, super capitulation. But if we do even just get into this little blue zone, they usually are followed by some kind of a price pump of some sort. So if we have a look at all of this data put together and the fact that we still have stayed above this 100 weekly moving average for Bitcoin, and every time that Bitcoin does tend to fall this far below the 50 moving average, we usually tend to see a reversal. Guys, there are a lot of signs pointing to the fact that this could be it. This could be the final month of just dealing with this Bitcoin price action before Bitcoin does in fact continue all the way up to the $52,000 target and potentially even higher. So that is probably the best bullish case scenario that I can offer for you guys. You can see right here, stocks actually did come all the way back. This is the S&P. It did get knocked out right here at its previous support flipped resistance, which is not necessarily great for stocks, right? We could have some issues. In fact, talking about the one thing or the few things that might invalidate everything I just talked about could just be some of the news that's coming out right now. I do just kind of want to go over this super quick before we continue. And then obviously I want to talk about a little bit of a warning for all of my friends out there. But of course, we do have some good news as well. I always got some good news in there. So you can see this is actually from the Bloomberg Open. And they say that futures slumped after a disappointing tech earnings. Meta, Facebook, dropped more than 20% pre-market. Spotify sank 10%. Equity markets in Europe also fell. Treasuries were steady. The dollar rose, right? We know the DXY is going up. Oil fell. And here's the thing. The BOE raised its key rate to 0.5%, with 4 officials pushing for an even bigger move of 50 basis points. So could this be the precursor? You know, if this is happening over in Europe, does this mean that they are in fact going to raise the rates as much as they had said they would for the US? We have to see what happens in March. March is going to definitely be an interesting month. But you've also seen that Evercore's ISI, Rich Ross said that you could see another 17% fall in the stock market overall. And something that is happening in the U.S. is Joe Biden's Fed nominees. You have Philip Jefferson, Lisa Cook, and Sarah Bloom Raskin, who will emphasize the fight against inflation in Senate confirmation hearings today. Okay, so Raskin probably faces the toughest path, with Republicans expected to pepper her with questions on her positions on climate change, crypto, and bank mergers. So there is a lot happening. But you know what else is happening in the background, guys? The United States national debt has just crossed $30 trillion. $30 trillion. I feel like it was just months ago we were sitting at around the $26 trillion level, and you could see that this has obviously no real notion that it's looking to change or slow down at any point, regardless of what the Fed actually says. And here's just a fun little interesting statistic before we move on. If you look at Bitcoin's price specifically right now, and we look at the market cap of Bitcoin sitting roughly at around 730 billion as of making this video, that would represent about 2.43% of the national debt. So interestingly enough, guys, if, let's say, the US government somehow was magically able to buy all the Bitcoin in existence today, it would only cover 2.43% of the overall national debt of the United States. Oh, not to mention, guys, that the Fed's balance sheet also stands at an all-time high of 8.86 trillion. They have a lot of work to do, my friends. They have a lot of work to do, and I don't really have confidence in the fact that they're going to be able to do what they say they're going to do, which is why I do think that just staying in Bitcoin could potentially be the best solution. Now, I did say short term we could see a little bit of a rough patch, but I do think that Bitcoin is going to end this year very, very well. I think it's going to surprise a lot of people. And Dylan LeClaire even commented on this. He said, as the debt spiral grows, the purchasing power of the dollar will continue to be sacrificed for political interests and Wall Street bailouts. Bitcoin fixes this. Do you really think that they're going to let all their friends on Wall Street just lose all their money? Do you really think that the United States and their big old ego is really going to let us just go into a true recession, let everything reset, which realistically speaking would probably be the best thing for them to do? Wouldn't really be great for any of us, short term, medium term. But either way, I don't think they're going to do it. I think that they are, I'm calling their bluff. I'm calling their bluff, guys. But let's talk about what is happening super quick, and then let's get on with the rest of this video. So you can see right here, Santiment actually pointed out that 40,785 Bitcoin were moved away from exchanges in just the past week. This was the highest week of Bitcoin exchange outflows since the second week of September. So we are seeing massive whales. I've talked about this in my previous videos coming in. They're buying Bitcoin, millions of dollars worth of Bitcoin at these levels. And we're seeing them taking them off the exchanges and throwing them into cold storage. You gotta look at what is happening. Now, here is a very interesting story that relates to what is happening in the US right now. So the IRS could potentially stop taxing digital assets obtained through staking. The agency added that it will refund the tax paid by Nashville couple, and this was Joshua and Jessica Jarrett. So essentially, they filed a civil lawsuit against the U.S. District Court for the Middle District of Tennessee. They demanded a refund of the $3,300 that they had earned in 2019 from staking their Tezos tokens. So In the court filing, they noted that tokens obtained through proof-of-stake protocols should be considered new property created by the taxpayer, not as income. Therefore, this new property should not be taxed until it is sold or exchanged for a readily accessible form of wealth. Now, while they did win this case against the IRS, allowing them to get their refund that was staked in the tokens, currently right now, since this is just the first situation that's actually, come to court and come to light, there is not actually an official guidance on crypto being staked for tax purposes as of today, but this is a victory, and this is one for the history books, and I am shocked to even see something like this happen personally, coming from the United States, the IRS actually giving a refund. Really blew my mind, but maybe they know something we don't. We do have the Biden infrastructure bill, or it's not an infrastructure bill, it's an executive order or whatever they're calling it, a matter of national security, and I think that this is going to be huge. The fact that we see Russia starting to embrace Bitcoin mining specifically, and we know how the US and Russia are kind of right now, it's, there's a lot of stuff going on, the US specifically, feel a little bit threatened, and we could end up becoming one of the major players in this Bitcoin race to accumulate the remaining 10% of the Bitcoin and become the mining giants, in the US, if they could do it. But it would definitely be interesting. So here is the warning, my friends. Crypto can be a dangerous place. The largest crypto hack of 2022 has happened so far. More than 321 million were stolen from the Wormhole Bridge. This was essentially a bridge that connects Solana and other blockchains to have sort of cross-chain, transfers. Now, they did come out and say that all funds have been restored and Wormhole is back up. However, a lot of people were pointing out that it wasn't the original funds that they were able to give back to the people using Wormhole. Apparently, it was just some big backing supporters that kind of covered the loss or something like that. The story's still developing. Maybe it's different. But I just want to warn you guys that, maybe next time, if this happens to a different type of protocol, maybe they won't be so friendly. So you do have to be careful with some of these, newer things. You have to make sure that they're audited and safe. There are a lot of issues. And another very interesting story that I wanted to bring out super quick is for people that are, into these NFTs. Now, I'm not saying I'm against NFTs. I'm very for NFTs, but I do think some of these prices, some of these things that are happening in the background are a little bit shady. And Chainalysis tracked wash trading that was analyzing sales of NFTs from self-financed addresses, or in other words, these were addresses funded either by the selling address or the address that initially funded the selling address. They say, we identified 262 users who have sold an NFT to a self-financed address more than 25 times. A total of 110 of these users have collectively made nearly 8.9 million in profit. They believe that these funds are most likely derived from sales to unsuspecting buyers who believe that the NFT they're purchasing has been growing in value, but really it's been sold from one distinct collector to another, and it's just insiders buying it back and forth from each other, or even the same person, just to prop the price up, ultimately to drop it in your lap. This was the exact same thing that happened with the and I don't know why I can't think of those guys' names. What are those guys that do the wow, it's slipping me right now. The is it Willow.com? Is it them? The guys that sell the houses. Anyway, they were caught doing insider buying. So what they were doing was they would buy, is it Willow? I can't think of what it's called. I think it is. But anyway, long story short, these guys were buying multiple houses in an area, right? And what they would do is they would buy a bunch of houses for the same price. They would own it for like, I don't know, whatever, 300,000 or something. And then they would buy the next one for 340,000. Now keep in mind, they own all of them. Then what they would do is say, hey, prices are going up in this area. Then they would backtrack on all the other houses that they sold and then resell those at the price. So all those houses were bought for 300. They bought the next one for 340. Then they changed all the other prices, to 40, right? 340. And now they have 30 of them. So you do the math, 30 times 40,000 or something like that. Now these guys are making massive profits, and they were the ones that were actually propping up the houses themselves, right? So is this what's happening in the background with NFTs? These guys are propping up the prices and then eventually dumping them on unsuspecting people who think that it's actually worth more. Another simple thing that could be happening is just sort of money laundering, right? Like, oh yeah, this NFT, it's property, it's sold for $8 million, but really this guy just wanted to send $8 million from here to this person, and they locked it in an NFT to claim that that's where the value was. They were buying a picture for $8 million, but really it was just an excuse to launder money. So a little bit touchy, probably sensitive for a lot of people watching, but just be realistic. I do think there are some shady things happening in the background with these NFTs. Be very careful out there. I don't want to see you guys holding these NFT bags and not being able to get any of your money back for them, unless you believe in it and you absolutely love the piece of artwork that you're buying. Then hey, I buy artwork and I have no intention of selling it, so I don't care what I paid for it because I like it. I want to hang it on my wall. You know what I'm saying? So, but just be careful out there. I do want to end though, however, on one more thing, because I was really, really, really upset the other day when you heard about the gubernatorial candidate in New York saying that we need to ban proof of work mining for Bitcoin. Just want to end on this note, guys. According to a recent report published on January 25th by CoinShares, Bitcoin accounted for only 0.08% of the world's carbon dioxide emission in 2021. So they went on to say that at 0.08% of global CO2 emissions, removing the entire Bitcoin mining network from global demand and thereby depriving hundreds of millions of people of their only hope for a fair and accessible form of money would not amount to anything more than a rounding error. So I think this whole Bitcoin is not green argument needs to stop. It needs to go out the window. There's so much evidence that you can point to. This article, for example, also the fact that we've seen so many of these guys moving to clean sources, over 50%, some are even saying up to 70% is clean and renewable. We're seeing all of it happen right now. Michael Saylor has even, been behind the clean energy movement as well. So just wanted to kind of end on that note. And whoa, this chart is messy. But of course, guys, getting back to this, you can obviously see that we are in fact in a descending, broadening wedge, okay? Doesn't necessarily mean we have to come down here. I did give the worst case, best case scenario, if that makes any sense, the bearish, bullish scenario. We could just break out, at any point, but this is ultimately bullish. And when you have a look at all this other confluence, you have this right here, you have this one dating back all the way to here, you have this one that Velvet, put out over on Twitter, going all the way back to the 2017 high. The fact that we're above the 100, and you're seeing the super guppy back into the blue, which we know doesn't last long historically, usually only lasts, at most 2 months. Things could be looking up for Bitcoin. So if you do believe and if you are still sticking around, this could be the biggest opportunity to get Bitcoin at these prices. We could be looking for one more final dip leading into the end of February, with March being an incredibly bullish month, back above $50,000 for Bitcoin. Let me know what you think about everything that I talked about in this video. Do you agree? Do you disagree? Thank you for sticking around. I know this was a very long video today. We had lots of stuff to go over. If you made it to the end, give yourself a pat on the back. I love you. You're the reason I make these videos for the most part every single day. My name's K-Dub. This is CryptoZombie. And if you haven't seen these videos popping up right here, right now, check them out right now. And until next time, stay crypto. And of course, peace out.